first and foremost, what moved the markets about 7:48 Central Time, 8:48 Eastern Time this morning, when the Chinese media outlet Xinhua reported that Donald Trump and Xi Jinping had a phone call Friday morning. They claim, the Ministry of Foreign Affairs claimed that this phone call was initiated by President Trump, and it looked like there's a lot of speculation on what it was, but overall, at least temporarily, futures and stocks pre-open rallied on that news. Now, that's really all we know about that right now. But besides that, on a day that's leading up to the non-farm payroll number, we got jobless claims that were slightly higher than expected, 247,000 versus 240 last month or last week. So those numbers starting to creep higher. We got productivity and costs that didn't show a good number, a drop in non-farm productivity of 1.5%, while unit labor costs rose to 6.6%. So costs going higher, productivity going down. Not a great combination there. Then we got a very interesting data point that we don't always see, and that is international trade in goods and services. So basically the trade deficit. And last month it was a record negative 140 billion. Remember, that was the import influx that really skewed the trade data, right? As suppliers rushed goods into the U.S. Now we had the reverse of that. So only a negative 61.6 billion in terms of a trade deficit. So what took away from GDP last month is going to add to it this month. How do you do the math? If you get to a 2.4 GDP, maybe it's negative 0.3 and positive 5% gets you in that 2.4% range. So that's the economic data that we got. All that didn't last very long as the market opened up higher, sold off, and now it's drifting back towards unchanged as ahead of the non-farm payroll data tomorrow. Big day tomorrow for non-farm payrolls, and we'll go over them